Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, as always, man, thanks for having me.
Gold has been taking a hammering of late. What's the cycle news on that?
Well, it's exactly what I had thought, it had kind of warned about with the worst case scenario with the 9-year cycle top. Gold actually is sitting at a 19-month low, Silver, I ran some numbers last week, silver at a 30-month low, copper at a 20-month low, the XAU, which is a basket of gold stocks, at a 29-month low. And then, people, I mentioned this one time before in an interview months ago, but the correlation between the cyclical movement with all the metals. And, we don't like to think about gold in terms of just metals and the industrial metals, particularly lead. But when you look at the facts, lead is sitting at a 22-month low as well. Nickel is it's doing the best. It's at a 9-month low. Tin is at a 24-month low, and zinc at a 23-month low. Now, this was as of last week. I don't know. There's been some bounces here last few days, but then today gold's getting hit again. It's all about that 9-year cycle, and there was a chance that the 9-year cycle low was still ahead, and then once that proved not to be the case, we talked about it and I started warning. I said the worst case scenario would be if it proved that we had this longer term 9-year cycle top in place, and we do, and that's the problem. Any bounce is going to be counter trend, and I think the direction overall is going to be down for a long time to come. Now, there's going to be counter trend bounces, and some of them are going to be good. Some of them are going to be of short term degree, some of them will be of intermediate term degree, and the intermediate term degree bounces will, they'll feel good. They may even, some of them, be convincing. But the 9-year cycle top is in, and the overall direction is down. The other thing that's going on with the commodity complex is it's taken a while for this to set up. And if you think about it, it took a while for it to set up with gold. I mean, gold basically just flatlined for a couple of years while, the top formed coming out of that 2015 low. And the same thing with commodities. Simultaneously we had the advance of the 3-year cycle bottom, or out of the 3-year cycle bottom in commodities, and when I say commodities, I'm talking about the CRB specifically. And it took it a while. We had the high in May, we retested it, it extended a little further than we thought into that May high, but finally it's starting to weaken and break down. The holdout in the realm of commodities has been oil. As I said, it's counter trend, but it kept pushing into a high, and, I don't have all the data to say that the 3-year cycle top is in place in crude oil, but it should be. I need to see a little more confirmation there. So it has taken a while for this stuff to set up, but it's set up. I mean, you can't argue with the results of what we've seen with the 9-year cycle in the metals. And like I said, it's becoming apparent in the broad commodity complex, and I think it's going to become more apparent in the energy sector, but it's still in the makings. That said, we have the same sort of thing going on in equities with the longer term setup.
Tim, with the price of gold reaching the point almost of break even, are we going to see some gold mining operations shut down because they just can't make money?
I think there's always casualties. I don't know specifically, on companies and so forth, but I would think it's just like any other industry. When prices are suppressed for whatever reasons, then sure, there's casualties in that, there's going to be operations that will suffer. Absolutely. The unfortunate thing is that, it was a crazy call to even talk about a possible 9-year cycle top in gold, but it is what it is. And, yes, there's going to be, there will be consequences. It's no different than when the oil prices go down, you see rigs in the Gulf shut down and that sort of thing and people laid off and sure, there will be consequences from it. Absolutely.
Will we see institutional buyers get back into gold, or are they just going to sit back and see what happens?
I think eventually that's what creates the cycle. There's more sellers than buyers, and at some point there'll be more buyers than sellers, and it'll create the cycle. But, this 9-year cycle low is not due for a long time now. And, until we get to that bottom, like I said, I think overall, sure, there'll be buying, but overall lower prices.
With so many metals at, year-long, 2-year-long lows, again, for mining companies, is this a really bad time?
Sure. Absolutely. I mean, they're going to feel the pressure. I mean, if the product that they produce, in this case, mine, is suppressed, then, that's what the gold stocks are telling us. I mean, what did I say? Let me get my notes. The XAU, which is a basket of gold stocks, at 29-month lows. So obviously they're going to start to feel the pain from that. Probably already are.
We'll have more with Tim Cyclesman Wood right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's happening on the commodity front?
On the commodity front, CRB is still trying to top, and we probably have seen the 3-year cycle top. And I think overall weaker prices in conjunction, with metals. And like I said, I think we're going to see the weakness begin to become apparent in oil as well. But oil is the holdout. Oil is the lagger in the commodity sector.
I know you say you don't pay attention to the news, but we always have international plays happening when it comes to oil. The Saudis saying they're now not going to have an initial public offering on Aramco until conditions are right. Do you think that they're waiting for higher oil prices, or are they right to hold off on giving a piece of their long-term bail or bucket of money?
I have no idea on the fundamentals behind that, because it's not something I follow. I don't know. I look strictly at the cycles and the statistics surrounding those cycles and the structure of the market. And looking at this may sound crazy. It's almost like which comes first, the chicken or the egg. But when a cycle is moving up, bullish news comes out, or news period, it's perceived as bullish. It could be the same piece of news, and in some cases it may be perceived as positive for the market, and in another case it may be perceived as negative for the market. But if the cycle's moving up, then it's either going to have no impact or it's going to be perceived as positive. When the cycle turns down, if there's it's just the opposite. So I don't know specifically, what their decision was or why it was based on, what it was based on, but every indication is that along with everything else, oil is peaking, and that it was a counter trend advance, just like what we've seen in the metals. And the evidence to that effect is, look at this. Look, everything, and this ties into equities. This will give us a good segue into the equity portion. But look at it. Everything bottomed in late 2015, early 2016. Gold, the CRB, stocks, and oil. It all made the same bottom. And crude oil, long-term cyclical bottom. And then, gold advanced 7 months. That 9-year cycle peaked in 7 months. Then it spent 2 years going nowhere, building that top. 2 years. The CRB did a little better which is a basket of commodities, because the various components. It's not just metals, but oil did even better than that. And so oil, everything has pressed higher into these longer term cycle tops. Oil, the CRB has peaked. Metals have peaked. We went through the list there. They've obviously peaked. The gold stocks have peaked. Oil is following. Everything is setting up. It's the same cyclical rhythm. Look at, the evidence. You know what I'm saying? It's there. So oil should follow in the same footsteps as gold. And we have the longer term setup. If we can talk about that maybe when we come back from the break, the longer term cyclical rhythm is also very similar with equities, and I would like to talk about that.
We'll have more with Tim Cyclesman Wood right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, so the cycle for equities, do we often see so many things like gold, oil, and equities marching to the same cycle, or do they usually bounce around separately?
Nothing moves. You can't. Here's the thing. People try to draw a hard correlation and say, okay, well, if the dollar's up, gold's down. If the dollar's up, whatever. It's not quite that simple. Sometimes the cycles are in rhythm to where there are inverse correlations, and sometimes for some period of time there's positive correlations. Each market ultimately stands on its own feet. But that said, in this bubble environment that we've been in, most things, by and large, have been moving to a very similar longer-term cyclical rhythm. And, for example, if we go back, everything blew up into the bubble top in 2007. Everybody's forgotten about the housing top in 5 and 6, and the fallout into 2007, the top in 2007, including commodities, including when I say commodities, oil, gold, and equities. It all peaked. Housing peaked a little bit earlier in 2005, 6. It all peaked together. It all rolled together into the low in late 7 and early 8. Late 8 and early 9. And then, including gold, there was a 4-year cycle low in equities. And then my expectation, based on the fallout and the events that led to the advance into the 2007 highs, was that the advance out of the 2009 lows would have all been counter trend advances. I think that was the natural direction the market was headed. And this is not an excuse. It is a fact that the reason that we saw the extension of the moves that we saw, the reason that the market has done, the equity market has done what it has done, has been because of the liquidity infusion to try to keep things together. I mean, that's a fact. And so they managed to hold things together, inflate it even further, that more of the same that created the bubble in 2000 and into the top in 2007, that time some factor of whatever was done again to create the even larger bubble that we have now. But anyway, I digress a little bit. The point is, everything peaked back then together. It basically bottomed back then together, these longer term cycles. So up we come out of the 2008-9 lows, oil, gold, all of it. And commodities, by and large, did not make a new high. The one exception, gold did move to a new high, but commodities as a whole, did not. Since then, everything has pretty much rolled over again. Think about it. We had a low in equities on the industrials in late 2015. Some of the other indexes and averages, it was like January, February of 2016. Where did gold bottom? December 2015. Where did oil bottom? Late 15. It may have been February 16, but late 15, early 16. Everything bottomed together. Where did CRB bottom? Same time frame. So all these cycles rolled into the same lows, and then they've rallied out of the 2016 low. Again, that's where equities really went parabolic into this top. Well, for 2 years, we have been building a top in metals. And all of this year, we've been trying to build a top in equities. And so I say that to say this. We're seeing the same cyclical pattern in everything except, we're seeing the breakdown out of the same cyclical pattern in everything so far except equities. And that does not minimize nor change the fact that it's a bubble or the fact that it's a top trying to take hold. The fact that it is taking so long is because of who knows what the factors are. I don't know what's going on behind the scenes. Is it outright manipulation? Is it just the nature of the bubble environment that we operate? I don't really all the way know, and neither does anybody else. But it's the same overall cyclical rhythm, and we are seeing all these other sectors begin to break down. And then when I say sectors, asset classes, gold, oil, commodities in general, then if we dig beneath the surface a little bit, within equities, different indexes and averages in some of the different sectors, we're also seeing some structural weakness there. But by and large, what I'm trying to say is that the top, this long topping process, it took 2 years in gold to build, or in metals in general to build. The same thing's going on in equities. And the fact that the Dow Jones Industrial Average, the S&P, and all the other mainstream indexes and averages held up, that's camouflaged, masked the overall setup. And so it's going to be a miracle if we don't see the same sort of breakdown in equities once the proper setup is in place, because it's still trying. But once that happens, it's going to be a miracle if we don't see the same result, the same longer-term cyclical pattern, and the same sort of decline that we've seen with metals and beginning to try to take hold everywhere else.
Tim, thank you so much for the update.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.